Alright, I'm going to say something that I know a lot of people are not going to like. I love SpaceX. I genuinely think it might be one of the greatest companies ever built in human history. And I am not buying the stock at IPO, not a single share. And before you close this video, give me 10 minutes. Because the reasons I'm going to walk you through today are not what you've been hearing everywhere else. This isn't doom and gloom. This is just me sitting down and actually doing the math. And what I found honestly surprised me. So let's talk about the SpaceX IPO. In June 2026, SpaceX is going to attempt to raise $75 billion in a single day. That number is so big it's actually hard to process. Saudi Aramco set the record for the biggest IPO in history back in 2019. They raised about $29 billion. SpaceX wants to raise 2.5 times that in one day at a valuation of $2 trillion. $2 trillion. To put that in context, that's bigger than the GDP of most countries on Earth. That would make SpaceX the fifth or sixth most valuable company on the planet the moment it starts trading, ahead of Meta, ahead of every energy company ever listed, and Elon Musk, who owns roughly 42% of the company, would become the world's first trillionaire on paper. I mean, the scale of this thing is genuinely historic. I get why people are excited. I felt the excitement too when I first started looking into this. But then I started looking at the numbers. And the numbers are a different conversation. Let me walk you through the 5 things that made me decide to wait. The first one is the valuation. And I know every finance YouTuber is going to talk about the valuation. But I want to explain it in a way that actually makes it land, not just throw ratios at you. When you buy a stock, one of the most useful things you can look at is the price to sales ratio. It just tells you for every dollar of revenue the company makes, how much are you paid. A normal healthy company might trade at 3, 5, maybe 10 times sales if it's growing fast. A really hyped up tech company in a boom market might get to 20, 25, maybe 30. At its IPO, Meta, which became one of the best investments of the past decade, had a price to sales ratio of about 26. Nvidia at the absolute peak of the AI boom in late 2023, when it was tripling its revenue year over year and everyone on earth was losing their mind over it. Nvidia topped out at a PS of around 40. SpaceX is targeting a PS of 108. 108. That is not a typo, that is not me cherry picking numbers to make a point. At $2 trillion valuation and $18.50 billion in revenue, the math is 108. So you are being asked to pay nearly 4 times more relative to what the company actually earns than you would have paid for Nvidia at its most hyped moment in history. And SpaceX is not growing as fast as Nvidia was. And SpaceX lost $5 billion last year. This doesn't mean SpaceX is a bad company, it means the price is not a bargain at all. Now here's something that I think is really important and that almost nobody is talking about. Most people watching this think they're buying a space company, a rocket company, the company that's gonna put boots on Mars. And I hate to break this to you, but that's not really what you'd be buying. SpaceX makes most of its money from Starlink, their satellite internet service, not rockets, not Mars missions. Internet, they're projecting about $15 billion in revenue this year. And the bulk of that, the majority of that, comes from people paying a monthly fee for satellite internet access. That's the business. It's a great business. Starlink is genuinely impressive and it's growing fast. But if you strip away the rockets and the hype and Elon Musk's vision of humanity becoming multiplanetary, what you're actually buying at $2 trillion is essentially a satellite internet provider. And if that wasn't enough, in February 2026, SpaceX merged with xAI, Musk's artificial intelligence company, the one that runs Grok, the AI chatbot, and X, the social media platform formerly known as Twitter. So now it's a satellite internet company slash rocket company slash AI company slash social media platform, all under one roof, all going public at once. UBS analyst, these are not random people on the internet. This is one of the biggest banks in the world. They came out and said that after the merger, investors will no longer see a space company with strong cash flow. They'll see a super entity that has to constantly balance cash coming in against massive ongoing AI investments. That's a very different thing to own. The question you have to ask yourself is, did you fall in love with SpaceX, the rocket company? Because that's not exactly what's on the shelf. Let me tell you about the mega IPO graveyard, because I think this is the most important thing I can show you. When people talk about IPOs that made people rich, they always bring up the same examples: Apple, Amazon, Google, and yes, those were incredible. But those were not mega IPOs, those were relatively small at the time. We're talking about a different category here. Let's talk about what actually happens to the biggest, most hyped IPOs in history. Uber went public in 2019 at an $82 billion valuation. Everyone was excited. It was all over the news, and on day one, it dropped 7.6%. On a dollar basis, investors who bought at IPO collectively lost $618 million in a single day, the worst dollar loss for a US IPO going back to 1975. If you bought and held, you spent years just trying to get back to even. Rivian, the electric truck company, debuted at $66 billion, one of the most hyped IPOs of 2021. $1,000 invested at IPO would be worth less than $200 today. Less than $200. Saudi Aramco, the previous record holder for biggest IPO ever. Years of flat or disappointing performance after the debut. And researchers who have studied this systematically found that IPOs on average underperform comparable public companies by about 20% over 3 years. Not just a few bad ones on average. Now, Meta is the exception. Meta went public to massive hype, dropped hard in year one, and then went on to become one of the best investments of the decade. So it can happen. But here's what's different about SpaceX versus Meta. Meta debuted at a PS of about 26. SpaceX wants to debut at 108. Meta was already profitable. SpaceX lost $5 billion last year. The gap between those two situations is enormous. Okay, here's the one that really stopped me in my tracks. And this is the thing I want you to really hear, because I haven't seen many people talking about it this clearly. SpaceX is allocating 30% of its IPO shares to retail investors. That's you, that's me, normal people with brokerage accounts. The standard is somewhere between 5% and 10%. SpaceX is doing 30. That's 3 to 6 times the norm. And when I first read that, I thought, wow, that's generous. They're giving regular people a chance to get in on the ground floor. That's pretty cool. And then I thought about it for another 5 minutes, and I started to see it differently. Because institutional investors, the hedge funds, the sovereign wealth funds, the pension funds, the people who manage billions of dollars and have teams of analysts who spend months stress testing these valuations, many of them are apparently not rushing to buy at $2 trillion. There's real hesitation in that war. So who fills the gap? Who buys the shares the institutions are cautious about? Retail. People who saw a YouTube video, people who are excited about rockets and Elon Musk and going to Mars, people who are making emotional decisions rather than financial ones. I'm not saying that's everyone, and I'm not saying SpaceX is doing something dishonest, but when you see a company targeting retail at 3 to 6 times the normal rate, for the biggest IPO in human history, at a valuation that has the institutional world cautious, you should at least pause and ask yourself, am I the smart money in this trade, or am I providing the exit? And then there's the Elon question. And again, I want to be really clear, this is not political. I genuinely don't care which side of the Elon debate you're on. This is purely about the business risk of having one person be the single most important factor in a $2 trillion company. SpaceX is setting up what's called a dual-class share structure. Basically, that means Musk and insiders retain near absolute voting power over the company, regardless of how many shares you own. If you buy SpaceX stock, you are a passenger. You have no meaningful say in how the company is run. None. That might be fine. Musk has earned enormous trust by actually delivering things that people said were impossible. He deserves some credit for that. But think about what you're being asked to bet on. You're betting that Elon Musk, who currently runs Tesla, SpaceX, XAIX, the boring company, and who has been deeply involved in US government work through Doge, will stay focused, stay healthy, stay out of controversies that damage the company's government contracts, and make good decisions for the next 10 to 20 years. SpaceX holds billions in classified defense contracts with the Department of Defense and NASA. If Musk's relationship with the government deteriorates for any reason, political, personal, whatever, that revenue is at risk, and you as a shareholder would have no mechanism to do anything about it. Tesla stock is trading at a significant discount to where it was, in part because of concerns about exactly this: Musk's attention, Musk's politics, Musk's other projects pulling him away. That same risk is now baked into your SpaceX position. It might not matter. Elon might execute everything perfectly. But you're being asked to pay 108 times sales for a bet that is highly concentrated on a single human being who already has a lot on his plate. Alright, so I've given you 5 reasons to be cautious, but I don't want to just leave you there because that's not helpful. Here's what I'm actually going to do and what I think makes sense for most people watching this. I'm not buying at IPO, but I am watching very closely because the first thing that historically happens after big hyped IPOs is a pullback. Institutions sell, early employees sell once lockup periods end, the noise dies down, and if SpaceX drops 20, 30, 40% from its IPO price, which is not guaranteed but is genuinely possible based on history, that becomes an interesting entry point. The other thing I'm doing is waiting for their first earnings report. Because SpaceX has never disclosed public financials, never, not once, when that S1 filing drops, and then when that first quarterly report comes out, we're going to see for the first time exactly how much XAI is losing, exactly what the margins look like, exactly what the defense contract exposure is. That information changes the picture. I want to see it before I put money in. In the meantime, if you genuinely want exposure to SpaceX right now and you can't wait, Alphabet, which is Google's parent company, holds a significant SpaceX stake already worth over $100 billion. It trades at a reasonable valuation with strong AI and cloud growth on top of that. It's not a pure SpaceX play, but it's exposure with a lot less downside risk. And there are companies like Rocket Lab, AST Space Mobile, and Planet Labs, smaller space companies that will benefit directly from SpaceX's IPO, bringing attention and capital to the whole sector. You get the space economy tailwind without the $2 trillion price tag, so let me land the plane here. SpaceX is extraordinary. The team there has done things that people said were physically impossible: reusable rockets, Starlink, crewed missions to orbit. These are genuine human achievements and I have enormous respect for what they've built. But here's the thing about investing that took me a long time to really internalize. You can love a company and still not buy the stock. Those are two different things. The stock is not the company, the stock is a price. And the question is never, is this a great company? The question is always, is this a great price for a great company? At 108 times sales, with $5 billion in losses last year, with a new AI company duct taped to it, with one man controlling all the voting power, and with a retail allocation that's 3 to 6 times the norm, I don't think $2 trillion on day one is a great price. So I'll wait, I'll watch, and if the price comes down to somewhere that makes the math work, I'll be there. If I'm wrong and this thing doubles in year one, honestly, good. I'll do a follow-up video admitting it and I'll be happy for everyone who got in. But if I'm right, the patient investor wins. They almost always do. Drop a comment right now. Are you buying SpaceX at IPO or not? I want to see where people actually stand on this. And if you think I'm missing something, tell me genuinely. I read the comments and I might do a response video if the argument is good enough. Subscribe if you want to follow this through to June. I'm going to be covering every development on this IPO as it happens. The S1 filing, the roadshow, day one trading, all of it. See you in the next one.